Hi everyone. So, you don't want to lose money in trading, right? Well, actually, you are wrong. So, this is Trading Psychology series from Trading Coach. So, today we are going to talk about something called as a loss aversion bias. All right. So, this is something that we are all prone to. As a trader, we need to keep an eye on this. Okay. If you don't pay attention to the loss aversion bias, it can completely destroy your trading capital. So, this is the most important lesson. So, make sure to watch the video till the end. And in case if you are new to my channel, I recommend you to hit on the subscribe button, tap on the notification icon so that you can get more interesting lessons and insightful videos just like these. Okay, so let us get into the topic. So let us start by understanding one of the most important questions. So who's a trader? Well, this is the answer from one of my favorite author as well as a trader, Nicholas Nassim Taleb. So as per Nassim Taleb, a trader is someone who knows how to lose money without getting used to it. All right. So what do we mean by this? What is the point of this particular answer? Well, if you really look at this, you can understand that there are two things which are, which this answer is trying to point out. Well, the first thing is a trader is someone who's always taking calculated risk, right? So whenever you are finding a trading opportunity, whenever you find a good trade, you're always trying to make sure you're taking calculated risk on that particular trade. You're always looking at the possibility of losing money in that specific trade, right? So that your losses will not be going beyond your limitations, isn't it? Your losses will not exceed your limitations. That's one thing. The second thing is, as we can see in this particular code, you should not get used to it. In the sense, even though we are taking calculated risk, we should not lose money on and on again. All right. It's the point of taking calculated risk. At the same time, whatever trades you're going to take, the trade should work out in our favor. All right. The probability or the odds of those trades should be in our favor. Okay. Well, Nassim Taleb is the author of one of my favorite trading books. The book is called as Fooled by Randomness. So the ideas and the concepts which I'm going to discuss in this specific video is actually from this particular book. So if you're a ferocious reader just like me, I recommend you to take a look at this particular book. I recommend you to go through it. So this is definitely an interesting read. It will change the way you look at the market. At the same time, it will change the way you think about life in general. Alright, now let us come to the important lesson of this particular video. It's all about accepting the losses. Alright. Yes, so when I was talking about this video in the beginning, I said whether you want to lose money or not. Well, that is not the question. That's a wrong question. Alright. When it comes to trading, trading is all about accepting the losses. Alright. So if you want to be a successful trader, if you want to make money in the markets, you must know how to take losses. So professional traders know this very well. That's the reason why they focus more on risk management. So instead of focusing on other metrics such as accuracy, win rate or probability, they focus on one important thing, that is risk management. So when we say accepting losses, it's a very simple thing to say, but it's very hard thing to do in practical trading, right? So if you're a real trader, you understand what I'm trying to say. So there is one problem we humans face when it comes to accepting losses, right? So whenever we think about losing money, that doesn't play well with us. It doesn't play well with our mind. So if you're a normal trader like me, this problem is even bigger for us than normal people. So we call this as the loss aversion bias. So loss aversion bias is one of the most dangerous thing that we must pay attention to it. In case if we don't pay attention to it, it can really have very bad consequences in our trading approach. All right. So what do we mean by loss aversion bias? Well, typically, I'm not going to explain all the hypothetical and all kind of scientific definition for it. But I will give it in a very simple sense. I will try to cover this in a straightforward manner. Say, for example, if I give you 100 rupees or $100, and if I ask you 100 rupees or $100, which is going to make you more sad? Definitely the point is, when you take 100 rupees or $100 from me, you'll be less happier. Likewise, when you lose 100 rupees or $100 to me, you'll be more sad. Okay, so typically, to put it in a simple sense, whenever you are accepting the profits in trading, right, whenever you get some profits on your trades, you'll be less happier compared to whenever you make losses in trading. So whenever you make losses in trading, you are going to be more sad. All right, it's a very simple and logical way to understand this. So whenever you are making losses, you'll be more sad, and whenever you are making profits, you'll be less happier. Okay, when you compare both your sadness and happiness, you are going to be less happy when you make money, you are going to be more sad when you lose money. That's it. So loss aversion bias can create extreme emotional response in our brain. All right, so there is a lot of scientific evidence to it. So whenever we lose valuable things, especially money, that can create extreme emotional response in our brain. And for an average trader, loss aversion bias makes it very harder for us to accept the losses and move on. Okay, so what's the solution for this? So how do we accept, how do we manage this loss aversion bias? Well, there is a way for it. We will discuss about that at the end of this specific video. We will talk about the tips and techniques to handle the loss aversion bias. But now let us understand some of the problems which we will face when it comes to loss aversion bias. Okay, so the first thing is, when we talk about loss aversion bias, it can create several problems. It can severely impact our trading performance. And one of the important problems with loss aversion bias is that we always have this fear of losing money. So whenever we find a trading opportunity, people with high loss aversion bias, people with extreme emotional response to loss aversion bias, they always have this fear of losing money on a trade. They think that whenever they take a trade, they are going to lose the capital, so they never take that particular trade. They miss out that trading opportunity. Whenever they find a good trading opportunity, they miss it out because of the loss aversion bias. And there are other set of traders who try to gain back their lost capital. There are a lot of traders who might have lost money in the market, so they try to gain back their lost capital by engaging in reckless revenge trading. So revenge trading is also another problem which comes from loss aversion bias. And there is also one more major problem. So sometimes what happens is we hold on to the position despite knowing that it's going to end up in a loss, right? So whenever you take a trade, you know that whenever the trade is going to go against you, whenever the trade moves against you, you know that the trade is going to end up in a loss. So instead of cutting out the loss, what you will do is you will hold on to it with some hope. That is also a reflection of loss aversion bias. So far we have understood the concept of loss aversion bias in a more theoretical manner. So let us look at the loss aversion bias using the real chart. Let us understand how this looks like in real life. Okay, so in case if you like to learn more about the loss aversion bias, if you like to learn more about the trading psychology, you can check out my website, that is www.tradingcoach.co.in. I will leave the link of the website on the description box. I will leave the link of some of my articles related to trading psychology, so make sure to check it out. And in my website you can also find more about my trading style. Okay, all right, now let's move on to the chart. All right, so let us understand the concept of loss aversion bias using this specific chart. So right now I'm looking at Marico Limited 1 week time frame. So if you look at this specific chart, we can see that exactly from this particular point till here, we have a nice uptrend. All right, so let us say you found this particular stock exactly at this specific point over here. So what you might have done is, what many traders and investors might have done is, they might have bought the stock. All right. So it's very tempting to buy the stock at highest levels, and it's also very tempting to sell the stock at the lowest levels. Not just stock, any asset classes, it's the story. So there is nothing wrong in buying this particular stock at this point. But however, right after buying this specific stock, you can see that there is a nice sell-off over here, right? So the prices consistently fell from this specific point. So the average traders who bought here right after they buy the stock, after a couple of months, the trade goes against them. So what they should do now? Well, there are two different options, right? So first thing is, they can exit the trade, right? They can take some losses and they can exit from the trade. They can look for other opportunities. Another thing is, they can hold on to the trade with hope, all right? So there are certain type of investors and traders who keep holding the position thinking that it will come back up, right? They have that inherent hope thinking that okay, one way or the other the stock prices are going to bounce back. So we have all these average traders who are holding the stock with hope. So what would have happened if they have done that? Okay, take a look at this. So for the next couple of months, the stock prices consistently struck on the sideways, right? So all the traders and investors who holded the stock with hope, there is a nice chance they would have lost other opportunities, right? So this is nothing but it's a very good example of loss aversion bias. So if you are an average trader, if you have bought the stock exactly at the peak value, when the market have gone against us, if the market goes against your actual position, the most logical thing is to exit your position. The most logical thing is to cut off your trades and look for other possibilities. But there are certain type of traders who might have succumbed to this loss aversion bias. They might have holded the trade hoping that it will somehow come back to their initial buying point, right? They keep thinking that somehow the trades will come back to their original position, which is not the case. Okay, so this is nothing but a classic example of loss aversion bias. So as a trader, we don't want to end up making such kind of mistakes, right? So what we have to do is we need to manage the loss aversion bias. So let us see how we can do that. So how do we handle the loss aversion bias? Well, here are a few of the tips and key points you can take away from this particular video. So first thing is focus on trading with proper strategy. All right. So don't trade based on gut feelings, impulsiveness or something like that. Always trade with proper strategy. Second thing is concentrate on risk reward. Make sure whenever you are trading on the markets, whenever you find a trading opportunity, look at both risk as well as the reward. Don't just focus on the risk and back away from the trade, or don't just focus on the reward and take too much risk on that particular trade. Always look at the two sides of the same coin, right? Always look at risk as well as the reward. And another thing is accept losses as a part of the trading business. All right. So whenever you are in the markets, whenever you want to be a successful trader, always keep this thing in mind. Accepting losses is a part of the business. All right. Losses are part of the game. And here is another important hack or a tip, whatever you call it. Make a mindset shift. So think about your losses as a part of learning lessons. All right. So learn from your losses, improve from your losses. Okay. So another important thing is if you're a trader who have lost a lot of capital in the past, if you have suffered a lot of losses in your trading, make peace with your previous losses. No matter how big or small they are, don't let them impact your present trading performance. All right. So just to summarize, beware of the loss aversion bias. Accept losses as a part of the trading business. All right. So I hope you learned some important and valuable lesson from this particular video. So if you like this video, please click on the like button. And if you have any doubts or any questions, or if you have any experience related to this loss aversion bias, share your experience, thoughts, and your feedbacks on the comment box below. I will try to go through it and I will try to answer it. And last but not least, thanks a lot for watching and happy trading.